Good evening, all the viewers. Today we have panel discussion on the recent changes in GST, and we have invited CA Manish Gadia from Mumbai, who is expert on the GST and past chairman of the WIRC. We have also have with us CA Visan Shah, past chairman Ahmedabad branch, as a panelist in today's program. And you all know our Central Council member CA Umesh Sharma, who is vice chairman to the GST committee and expert in the topic. So these three panelists and I am doing the moderation work today. And topic we have chosen is the recent changes. Somebody was talking me that how many changes actually happened in last 2 months in GST. Then I told that we have to do the research and find it out because numbers are huge. There are good number of changes. GST Council 50th meeting, somebody made a video. I think the Umesh Bhai has made a video. GST Council having 50 amendments. And then after we had the 51st meeting of the GST Council. And apart from that, we have seen the GST Amendment Act, IGST Amendment, CGST Amendment Act, IGST Amendment Act. So good number of changes are there. So ICI planned this webinar in the mode of panel discussion. So straightway, I am inviting all the participants, all the panelists for the panel discussion. If initially Mr. CA Manish Gadia want to say something about these changes, some overview, I am going directly to CA Manish Gadia.
Thank you, Chairman Sushil Goyal sir, for inviting me here to share my thought. And you said that so many changes. So what I learned in last 6 years is as far as GST is concerned, the only thing which is constant is change. So the first change what I'm going to cover is that the various notices and various things we are getting from department as far as GSTR 2B and 3B mismatch, etc. are concerned. So now they have come out with a new rule, Rule 88D, which says that if any SSC has claimed GSTR 3B, ITC in GSTR 3B more than GSTR 2B, what was appearing in GSTR 2B, from a certain limit, from certain prescribed limit may be prescribed by GST Council, then officer will issue DRC, GST DRC 01C form, where he will say this is the mismatch, and now you are required to pay this much tax amount because you have claimed GST ITC more, because we all know that section 16(2)AA says that SSC can claim GST credit, whatever it is appearing in GSTR 2B. So this he will issue in part A of DRC 1C, and two options will be given. Either the SSC will make the payment of difference or he will explain the reason for the same. And this will be issued maybe either on the portal as well as he will send email also on the registered email ID of the SSC. Within 7 days, that SSC is required to reply for the same. So it is my humble request to all the participants that you should guide to your client that it is must for all the SSCs to visit the site of the GST to check any notice, etc. has been issued on maybe at least twice a week. Because here I am saying that time limit is only of 7 days. Within 7 days, either SSC will make the payment in DRC 03, he will accept that liability along with the interest and intimate the same in part B to the officer. Or else he will give the explanation. There may be various reasons. It may be possible that in a particular month you have taken less IT in a past month as compared to 2B, because maybe goods has been received in the current month. So maybe this month your ITC may be more, or whatever, maybe I'm not going into the reason. So you have to explain the reason. Again, a reason, two possibility for the officer, he will accept the explanation, then it will be dropped. If he will not accept the explanation, then he will issue a demand under section 73 or maybe under section 74. Along with this change, a new rule changes has been made in rule 59 also. And rule 59 prescribed that once this DRC 1C has been issued, then GSTR 1 of the SSC will be blocked till the time either he will make the payment or he will give the explanation. So it is very important if this kind of notice may be issued on maybe 8th or 9th of the month, then it will be difficult unless you give the explanation maybe within 2 or 3 days. Then you will not be able to upload your GSTR1 on time. And if you will not upload, then it will not appear in the GSTR2B of your client, that credit. So then you have to be very cautious about this. And again, sir, one more changes is in respect of mismatch between GSTR 3B and 2B. One circular has been issued. So if you permit, I will cover same or maybe after some gap. Chairman, sir.
Yes, Manish bhai, I will come back to you. And definitely the circular is very important and we have kept that for discussion also. I
Yes.
just want to quickly go to the Visan bhai and Mr. CA Visan sir to understand how quickly the department will, as Manish bhai has raised a question, that if department is not doing quickly this changes or they are not accepting this, then GSTR 1 for the next month will not be allowed or the GSTR 3B of the next month will not be allowed. So whether this will be a cause of concern for all the taxpayer due to this new amendment or it will be smooth? What is your expectation, Bisan sir?
Yes, sir. Thank you so much, Chairman, sir, for giving us this opportunity to share our thoughts and views. Manish bhai and Umesh, sir, it's a great opportunity to deliberate with you all first. Sir, coming to the question which you have posed to Manish bhai, and Manish bhai came from some thought out of it that yes, it will be difficult to the taxpayer to verify those things. So if we can represent to the government about the taxpayers' difficulties in this situation, it will be, I can say, more purposeful and meaningful in that scenario. Yes, people will face the difficulties as said by Manish bhai. Yes, sir. Over to you, sir.
Umesh bhai, anything you want to add here for particular situations which is Manish bhai have apprehension and confirmed by Bisan bhai that there will be difficulties. So what you think that whether this is going to be a difficulties for the taxpayers if they are done some mistake or genuinely sometimes we understand that the credit for imports are not might be coming due to the because the it is coming from the custom portal, the credit on imports which you are eligible for GST, it is not appearing in 2B and sometimes it is not transmitted as and when it is required, it is sometimes get delayed or the credit in respect of RCM which the tax has been discharged by the taxpayer. There may be a mismatch due to this may arise. So how the taxpayer will handle this type of situation? Anything you want to say on this?
Yes, good evening to all the participants. It's a 1000 plus participants. Congratulations to our chairman Sushil Goel sir and both the panelists Manish sir and Vishan sir and our team. And quickly on the point, that is the ITC and the issues of ITC related to the recipient. Recently, sir, Asta Enterprises judgment also came from Patna High Court, and they said that even though supplier doesn't pay, ITC will not be eligible. Even though we have DY Bithal Enterprises judgment, which is in favor of the genuine taxpayer, and as rightly pointed out by you, sir, now the technical issues of not reflecting the imports into B and no ITC, these issues are cropping up for the genuine taxpayer. Just I want to sum up in one line, sir. The festival of Raksha Bandhan is coming. So there is less raksha to the ITC recipient and more bandhan on him.
So you use the word Raksha Bandhan, but if you are talking about the Bandhans only, no Raksha is coming to this. And definitely, Umesh Bhai has raised a valid point that some ITC which is genuinely allowed, should be allowed, not genuinely allowed, should be allowed, and but due to the some fault of the service provider or the supplier, I can say more correctly. So why he should suffer? But this will definitely going to be a hindrance. Manish ji, you want to discuss some circular in relevant to this? Please touch upon that, and so we can move ahead.
So, sir, on 17th July, department had come out with one circular number 193/5/2023. So the issue was that in the year 2017-18 and in the year 2018-19, the department has come out with the circular 183 on 27 December 2022, which was talking about mismatch between GSTR 2B and GSTR 3B. Sorry, GSTR 2A and 3B. So generally, taxpayer were facing issues, and to come out with the solution, department has come out with the circular and saying that that if your ITC from a particular supplier is less than 5 lakh rupees, then you take a declaration from the supplier saying that this he has paid the tax, and instead of he has to give the reason why it is not appearing in GSTR 2A of the SSE. And then on that basis, the credit will be given. If the amount is more than 5 lakh rupees, then the supplier has to give the auditor certificate to that extent that genuinely tax has been paid. And because of this reason, this is not appearing in the 2A of the customer. So this circular was issued, and the issue related to this 2 years, 2017-18 and 18-19 was taken up and resolved by the department. Now the issue crop up for the next year, 1920, 2021. So what to be done? So again, definitely the institute has represented. So they have come out with the circular number 193, and where they have said that in this kind of scenario, whatever has been mentioned in circular 183 will also be applicable for the year 2000, 1st April 2019 till 31st December 2022. 21, sorry, 31st December 21. Subject to condition that they have come out with the rule 36.4 with effect from 9th October 2019, where rule 36.4 says that in a particular month, if some amount is appearing in 2A, 100 rupees, then the SSC can take up not more than 120 rupees as GST in 3B. So that cap of 20% was there. Later on, with effect from 31st December, with effect from 1st January 2020, that limit of 20% has been reduced to 10%, and later on, from 1st January 20 onwards, it was 5%. That limit was there for per month. So while issuing this circular 193, what they have mentioned that whatever has been mentioned in 183 will be applicable subject to the fulfillment of condition of rule 36.4. So if again the amount is more than 5 lakh, that mismatch is there. So in that scenario, you need to take an auditor certificate. And auditor certificate also you have to match month-wise month. So in a particular month, if it is more than 20% or whatever may be reason, so that need to be given. So again, that is a difficulty or maybe a challenge what has been given in a circular. So really this circular is beneficial or will create more issue, I don't know. But to some extent, what I feel is whenever it will be possible to give this kind of circular, at least that credit will come to me. Another question what I want to pause here is whether denying the credit on the basis of Rule 2A, basis that credit is not appearing in GSTR 2A. That what has been given in Rule 36(4), which was already challenged in Gujarat High Court. And I think it has not been given any decision on the same. Bishan Bhai may be the right person to comment because he's coming from Gujarat. So I would like him to give his comment on that validity. So I'm not going into that validity. So it says that in that scenario, that challenge is there. And again, further that circular, yeah. So that is from my side on this circular. So over to you, Sushil sir.
So, Umesh bhai, anything you want to say about the circular 193, which Manish sir has discussed right now? It is the new circular, and people were welcoming, and while announcing this provision,
Yeah,
government
sir.
was celebrating that they have extended the provision of section circular 183, which was initially announced for 2 years only, 2017, 18, and 18, 19. Now it has been extended. But Manish bhai is not sounding very good.
Yes, sir. It's a true that because we wanted that the relief should be extended till the December 21, but in between they poke in the 36(4) rule, and the substantial benefit is reduced, even though there is a valid ledger confirmation and all the documents. So it was the circular is not up to the requirement of taxpayers.
Yes, sir. May I add to this?
Yeah, Vishan bhai, you want to add
Yes,
something?
yes, sir. Sir, first of all, we were thinking that Rule 36(4), when it was introduced on 9th October 2019, it was not as per the law, because it was not as per the section, because Section 16 was stating that you have to fulfill only 4 conditions, and according to it, if you fulfill those conditions, then I am eligible for the credit. Then this 36(4) rule came, which is overriding the section. We always say that there is no need to see for 36(4), but then after section 16 to AA was in place from 1st January 2022. So at that time, we can say that yes, I have to fulfill that condition. When circular came, we were so happy that yes, now we are eligible to take the credit which are not reflected in 2A on fulfillment of those declaration or certificate from the chartered accountant. But what it is saying is only for that 20%. Say I have a credit reflecting in my books of account at 100 rupees, then I am eligible so far as the 36(4) is concerned, only a credit of 80 rupees and 20 rupees I am eligible. Though my books of account says 110 rupees, I can go for only 20% I can say difference. But that is what is eligible to me. What new is there in this circular, I cannot able to understand. Moreover, in Supreme Court judgment of Bharti Airtel, they are saying your books of accounts are final. GSTN is only a facilitator. So how this circular, I guess this is a try of the department to give authority to Rule 36(4) instead of giving something to the genuine taxpayer. That's from my side, sir.
Thank you. Next topic which we want to discuss about this cross charge, which was always a cause of worry for the consultants, how the cross charge will be dealt. But a recent circular 199 has been issued by the CBIC. That is the decision of the 50th GST Council. 199 circular talks about input service distributor and cross charge, how to be dealt with. I think Vishan sir want to take lead in this particular topic. So over to Vishan sir regarding
Yes, sir.
cross charge and the input
Thank you,
service.
sir. I feel nostalgic when we heard this cross charge, because I witness your view on this cross charge when we were dealing in indirect tax committee in 2018-19, and at that time also you said that there is nothing like a cross charge. this circular is double century. Just government has played like I can say Sachin Tendulkar while issuing this circular, and they made it this law more simple with this circular, where it has been deleted the judgment of Columbia, AAR, AAR, whatever we were discussing, and said that when there is a distribution by a head office to HO of any common input services, that can be possible through either ISD mechanism, but for that HO has to take the registration, or they can issue a tax invoice to their branch office, and that credit can be distributed on transfer raising the invoice as well. Now, regarding the valuation of those common input services among head office and the branch office, they are saying that if the credit is eligible to branch office, then under Rule 28, there is no bar. Any value can be taken. And if, say, HO has not raised the invoice also, it will be treated as nil for the said supply between two distinct person of same PAN, that is HO and branch office. It might possible, sir, that though some services are being procured by head office and specifically for the branch offices, then we have discussed that situation, but it might possible that some services are self-generated so far as the employees are concerned, which are on the payroll of head office but working for the branch. So in that scenario as well, circular says that there is no need to issue any cross-charge invoice so far as credit is available or not, or if the credit is not available, then also it is not mandatory for head office to raise or to charge for such self-generated services to branch office. So in a way, I can say that they are making the tax law more simple by issuing this circular 199, sir. That's it.
Umesh bhai, Bisan is totally endorsing this circular 199. So any view you want to add here?
Sir, actually, this is a clarificatory and a good circular, because the in audits many time the officer comes and says that you are a multi-state taxpayer, and what are the transactions happening, how you are allocating the expenses, and lot of issues are being raised, even though they are not knowing the how trial balance are maintained for the state, what are the transactions happening, and they just impose that what is the cross charge you are doing, and many issues crop up. So this circular will settle lot of issues which are going on.
So at this point, I want to tell all our viewers that Umesh bhai has raised very pertinent issue. That is, it is a clarification, not an amendment, and not a changes in the law. Since it is a clarification, means it is applicable from the inception of the law. So from 1st July 2017, this provision will become applicable, whatever has been mentioned in the circular 199. And I also want to request all the viewers, if anything you want this panel to take up for discussion, you can post that question sitting at your home. That facility is available on your machine, and you can just type the questions and it will come to us, and we will definitely try to discuss. In today's panel, if we are not able to discuss due to time and the agenda is used as we discussed in the beginning, so we will definitely try to organize another webinar for that purpose. So please keep on posting whatever is coming to your mind, so we will able to take up as and when it is time permits. So now I want to discuss this circular number 195. for which the Umesh.
Sir, before that, I want to add something, if you
Oh,
permit.
sorry, Manish bhai, I have not given you opportunity. This was the circular on cross charge, and everybody want to speak. Have some views, because let me have here the Manish bhai views, then we will go for circular 195. 195
Bishan bhai,
we are presently discussing. Yes, please, over to Manish.
So Bishan bhai and Umesh bhaiya has covered in detail, but 2-3 points are not. I am not still clear. So I thought maybe that I will take the opportunity to understand from other
Well, now you
panelists
are
also.
becoming a student rather be teacher. Thank you.
Because one word they have used is that ISD presently is optional. So the word used is presently. So that clarification is good, that till now, whatever, if you have not taken ISD and if you have done the cross charge, then no issue will be there. That is very good thing what they have done. But presently optional, it means that government may be thinking of amending the act in future and that making ISD mandatory. That may be a possibility, I don't know. Second,
So, sir,
second
someone
is-
had asked this. Someone has asked this question. So, whether ISD is compulsory or not. So, I guess you have given the answer to this.
Yeah.
Till
But yeah, and second is they have given very good clarification about Rule 28, where they are saying that the full credit is available to the recipient. Then whatever may be the transaction value will be treated as open market value. And if it is not charged, then it will be treated that the nil is the market value, open market value, and nothing, no ITC, nothing has to be done. So this clarification, what they have given, is really, really very good. And whatever various issue has been raised by the department will put to an rest. Again, one more issue which has been put up in question also by one of the participants, saying that the corporate guarantees issued by maybe a holding company in respect of maybe loan or other things of the subsidiary companies. So Rule 28, in my view, is applicable to distinct person as well as to the related party. Same provisions. Taking that analogy in the circular, giving the reference of Rule 28 and analyzing the Rule 28, that if it is a nil, then also it will be nothing to be done from the department side. So my view, I want views of the panelist also, that in respect of corporate guarantees or maybe in respect of related party transaction, if full input tax credit is available to the recipient, then the same ratio what has been given in the circular can also be applied, and you can because DGGI has issued a lot of show cause notices in respect of corporate guarantees specifically. So you can take that view. So maybe Chairman sir, your views or and the panelists want to add on this. That is from my side on this circular.
I invite Umesh bhai or Bishan bhai to say something about it.
no, so far as the corporate guarantee is concerned, same view, and they want to make these transactions for such dilemmas simple. And for that reason, I go with Manish bhai that yes, there is no need to have a separate valuation. Department is coming with full-hearted with such type of circular and making double centuries for the betterment of their citizens and taxpayers. That's it, sir.
Same view, sir.
One
Beneficial circular.
thing, Umesh bhai, I want to ask, or Manish bhai, I want to ask. Bishan sir has discussed about the Columbia ICR, one judgment, double A, triple A, whatever he said. I'm not going into that. But I simply, as a taxpayer, I want to know whether Columbia ICR still exists or it is gone. One line I want to know whether Columbia ICR have no effect anymore, or it is still some limb of that judgment left out and which is not covered, or it is totally gone. That final comment from the Manish bhai and the Umesh bhai.
So I agree with Umesh bhai that any circular, if department is issued, which is analyzing the provision of the law, and if provision of the law has not been changed from 1st July 2017 onwards, then this circular should be applicable from 1st July 2017 onwards. So whatever AR, triple AR, whatever you said, sir, or Bishan Bhai has said, then in my view, this circular will prevail over that. And this circular is really, really, I should say, our compliment to the government is that this kind of circular is very difficult to see that they are clearing so many things in favor of SSCs. Over to you, Umesh Bhai.
Yes, I also of the same view, Manish bhai.
No more Colombia as yet will be come to our dream and disturb us. So
Yeah.
now we are going for the next topic, that is circular 195, that talks about the replacement, respect of warranty replacement of parts and repair services during warranty period. So Umesh bhai, I think you wish to take this, or I want you to take this topic for this.
Yes, sir. This circular 195 is another clarificatory circular, sir. And this is also covering the area of warranty. And warranty is a very important subject in many of the FMCG or consumer durables and automobile companies. And this issue started from Mohammed Akram case law under VAT, and then it came into the GST also. But in this circular, thanks that they have categorized the transactions. What happens in a warranty? There is a manufacturer, there is a distributor, and there is a consumer. Say if we have a mobile, Samsung is the manufacturer, distributor is the Samsung distributor, and there is a consumer. So whenever the transaction moves of warranty, the taxation of GST has been properly explained. And the first question which was answered here is whether GST is applicable on replacement of parts or repair services provided during warranty period without any additional charge from the customer. So here the customer is coming, giving his mobile, parts are replaced or repair services are given. In answer is that no GST if the manufacturer or distributor provides replacement of parts or repair during warranty period. So this is very important, and without charging anything from the customer, then there is no GST chargeable to the customer. So this is very important. But the another question which also been answered, we are going one by one the question. The second question is, are manufacturers required to reverse input tax credit on warranty services provided without any additional charge to the customer? तो पहले पार्ट में हमने we discussed that the customer is not burdened with GST. Now we are on the part of manufacturer, whether he has to reverse the ITC when he provide the warranty services without any additional charge to the customer. Here also the question is answered that no ITC reversal is required for the manufacturer for the replacement of parts under warranty without any extra charge. So this is a very important clarification from manufacturer perspective. Now we come down to the third question. Now the question is pertaining to the distributor. Does a distributor need to pay GST on the warranty services provided on behalf of manufacturer without charging to customer? Because the role of the distributor in this transaction is like a middleman. So he is providing warranty services on behalf of manufacturer. So here also the question is answered that the distributors provide warranty services on behalf of manufacturer without charging any extra cost to the customer. No GST is payable by the distributor also. So this is very important clarification. Now comes the question number 4. There are two types of warranty transactions. One, like mobile, we are giving it to the Samsung distributor. The Samsung distributor is sending the mobile to the company, and the company is changing the part and sending it back. This is one type of transaction. The another type of transaction is we give mobile to the distributor. Distributor himself has a stock of parts and he provides the spare part from his own stock. So here that aspect is there, and also repair services are provided by the distributor. But in this case, the distributor recovers that money or charges that money from the manufacturer. He don't charge to consumer, because that is already answered in question number 1. Now we are on the transaction that distributor charges to manufacturer under warranty. So here it has been very clearly categorically told and clarified, and which is also a correct law, that yes, GST is payable on such repairs or replacement of part by the distributor to the manufacturer, and manufacturer can avail input tax credit. So friends, there are two type of transaction. One, the distributor giving services to consumer, no GST. Now distributor charging to manufacturer, there will be GST on that. And now the last question which is answered here is the extended warranties. Many times when we go to buy mobile or say automobile, along with car, they say that you will get a 2 years extra warranty. You pay 50,000, 5,000, whatever it may be. If the customer agrees to the extended warranty at the time of original supply itself, means when we are purchasing new car or new mobile, then it's a part of composite supply. So it goes along with that and GST is payable. But say after original supply, after 3 months, 4 months, a customer comes and there is a separate contract entered, then it will be treated as a service extended warranty, and separately GST will be charged on that to the customer. So this is 5 questions which are been answered. So I hope I have simplified this 195 circular, sir. Over to you, sir.
Thank you, Umesh Bhai, for elaborated discussion on this circular where it was required also, because this was always a point of dispute by the department. So I think all dispute will be settled down now. And over to Bishan Shah for any comment on this particular circular or his supplement on this particular circular if you want to add.
No, sir, very good circular, I can say. And Umesh bhai, I guess now people will not buy extended warranty or warranty along with the vehicle. That will be the business dynamics now, because otherwise they have to pay a higher rate of tax. So far as the motor cars are concerned, it is
28%
43
plus cess.
28% plus cess. And if they are separately buying this, then it will be 18%. So obviously people will not buy at the time of purchasing the vehicle. So in a way, sir, it's a good clarification, I can say.
Yes.
Over to you, sir.
Manish Gadia ji, you want to say something?
No, in detail, Umesh Bhai has covered all the scenarios, and I compliment again government for giving such a beautiful circular, giving in detail the supply and the ITC, both the scenario they have covered. Really, it is great, and it will help industry, specifically as FMCG and automobile industry.
Thank you, Manish ji. And quickly, I got a question from Sandeep Kumar Wadhwa, and it is very pertinent to this AMC. So I taking up this question. AMC issued for 2 years with parts and labor, and GST to be charged on sale of AMC or at the time of actual transfer of parts and labor done periodically. This is the question, Umesh sir. Whether the service, when AMC payment has been made, that time only service tax is payable on AMC, or whenever the parts are sold or services are provided. This is the question.
Now, when we go through the question, it is a AMC, that is annual maintenance contract, and it is covering both parts and services. So it goes into the composite supply, and composite supply, and it covers the part as well as the services. And the principal supply need to be determined in case of composite supply. Here the value of the parts and the value of services need to be determined. And if a services is the principal supply, then it's a service contract. Then on advances, we have to pay GST. So AMC, the amount received, the GST will be levied.
Do you like to have another? Thank you, Umesh bhai, for answering this. Another question came, and whether and it is pertinent to ITC. So Manish bhai, I also want your attention. Whether ITC to be reversed on defective parts replaced under warranty, and if the defective part is destroyed.
Shall
Yes,
I
Umesh.
answer, Manish
Yes,
bhai?
Umesh.
Or
Yes,
you will
yes,
answer?
sir.
First, your view.
Okay. Now here, this is very important question. See, why? Because I have given a mobile. My screen was damaged. So screen was replaced by the distributor or by the manufacturer. So in this case, the original screen was replaced by the new screen. Now what happens to the defective parts? That is already covered under warranty. So no ITC reversal is required. Even I scrap that part. The question then, if I sell it is at a scrap, then it will be a separate contract of supply and GST will be levied accordingly.
Thank you.
What will happen, Umesh Bhaiya, that the replaced part ultimately has been destroyed. That what the question Chairman sir has asked.
Even that is destroyed, no ITC reversal is required because it's already a part of the warranty contract and it is within the period of warranty.
And one more thing I just want to add here is that if we go to section 17(5)(h),
Yeah,
it says that goods lost, destroyed, etc., etc. So it's talking about goods. And in my view, we have not sold that screen as such. We have sold a mobile. A screen is just a part of that. So the entire goods, that mobile, is not destroyed at all. So in my view, 17(5)(h) will also not apply to this scenario. One specific part is destroyed in that scenario. So over
yeah.
to you, Chairman sir.
Yes, correctly covered by Manish bhai. And thank
And
you, Umesh ji. Anything want to say, Umesh bhai?
नहीं वो एक कहावत है, फैशन के दौर में गारंटी का कोई भरोसा नहीं, तो वारंटी के दौर में जीएसटी का भरोसा ये सर्कुलर ने लाया है.
Thank you. And presently, 2,100 entries are there for the login, which I can see, and all this due to interesting topics which we are taken, and the panelists all from Western region, all three panelists. Now we are going for the next topic, that is the manner of computation of interest under section 53. That has been clarified by circular 192 also. So over to Manish Gadia, I want to take up this issue. What is the manner, how we should calculate, and how much this circular is going to help the industries or the taxpayer, the correct word.
Thank you, Chairman sir. So we all know that section 53 gives us how to calculate the interest. At the initial phase, there was a confusion saying that if you have availed the credit but not utilized the same, department interpretation was that you are liable to pay the interest on the same. Later on, they have clarified and amended the law and said that once you availed and utilized, then only GST interest shall be leviable. If you have only availed, but it is there in your books of account or in your credit ledger, that interest is not leviable. So all this fact we are aware. Second is that there is a provision, Rule 88A, which gives the manner of set-off of ITC. So which says that your IGST liability first has to be set off against your IGST credit, then against CGST, SGST, UTGST. Your CGST liability should be first against set off against your IGST credit. So if you see the manner of set off, what has been given in 88A, so what will happen is that whether if you have availed IGST wrongly, then also you will utilize that IGST amount, and maybe the CGST and UTGST which has been correctly availed will be there in your balance account. So now here the question arises that what will happen to the interest of that IGST which has been wrongly availed and which has been utilized because of the manner of set off which has been given in 88A, but the similar amount is there in your CGST as well as in your SGST credit. So now this circular clarifies that in the total, you have to see the GST, you have to see the ITC in the totality. not IGST, CGST, SGST standalone basis. And in totality, from the date of utilization of the credit till the reversal of credit, or maybe till the payment of that credit, what has been wrongly availed, if you have balance, maybe any of the account, CGST, SGST, IGST, etc., then interest will not be leviable. So this is, I should say, a very good circular what they have come out, and it will help to the SSE. And further, this circular also clarifies about the compensation cess. So if you have availed the compensation cess wrongly, but if you have credit in CGST, IGST, because compensation can be set off against only compensation cess. So this facility will not be available, or this interest facility will not be available for compensation wrong availment if you have utilized the same. So that is from my side. Over to you, Chairman, sir.
Mr. Visansa want to add something here?
Yes, sir. This circular is talking about IGST if wrongly availed, and if there is a balance. So if there is a CGST which has been wrongly availed instead of IGST, then also this analogy can be applied. And for SGST, I also want that I should be able to apply this analogy. That is what I feel. Umesh bhai, if you want to say something on that.
No, my question was the same, that it vice versa should also be allowed.
So thank you for having a detailed discussion, and viewers are increasing continuously. So I hope we are going on the right track. Now we want to discuss amendment in rules regarding the registration. Number of things has been changed, and even somebody was jokingly mentioning that the GST registration, whether getting GST registration will be difficult, or it is only the government want to give to the genuine person only. In the process, whether it is not becoming so harsh, or whether some other ways may be adopted by the government. These are the open questions I am throwing to this panel. So first we will start with Sinsa for taking up these amendments, and then
Yes, sir.
Sharma and the Manish Gadia for the add-on services.
Yes, sir. Thank you. I can say from like the first amendment is in Rule 10A for furnishing bank details. It is a preventive measure from the government. Previously, it was 45 days time, which has been given to the taxpayers that they should update or furnish their bank details on the common portal. Now they are saying that you have to furnish it within 30 days, or filing of your return for outward supply, or using IFF facility, whichever is earlier. So, meaning thereby, if I am granted registration today on 28th or 29th of August, then I have a time of 30 days to furnish my bank account details, and I can furnish it on or before 28th of September. So, or secondly, if I'm filing my GSTR1, then before that. So my due date for filing GSTR1 is 10, or if I'm using IFF facility from today itself, then also I am required to furnish my detail by today itself. So whichever is earlier, according to that, I need to furnish the details on the common portal of my bank accounts. This provision is not applicable to, as we know, to the person who is liable for deducting the tax or collecting the tax, or in the case of suo motu registration. This provision is applicable from 4th August 2023. And if the person is not furnishing this detail within the stipulated time, then his number will be suspended automatically through a system. If he furnished this detail, then that suspension will be revoked automatically, and the system will continue this registration. But if the registration has been cancelled due to this, then a person is required to make a manual or a application through the common portal. That is what the provision so far as the rule 10A is concerned. Sir, if anyone wants to add to this.
Yeah, Sushil sir, let me go to the meeting which we had with the GST and network.
I was waiting for this only.
Yeah, yeah.
Thank you Umesh bhai for
So, so, so,
suggesting.
so please,
I
please
think please
elaborate.
cover.
Yeah, Sushil sir, you can elaborate.
No, Umesh, please you started. Please cover it.
Yeah, there was a meeting in the month of July, first week or second week, by GSTN, and it was on the same minac of the fake invoicing, fake registration, and revenue secretary, our honorable chairman Sushil Goyal sir, and other trade bodies. We all were invited. So we went there, and there was a lot of debate: what to do, how we can stop the registration, because there are frequent flyer, they are coming here, and they even referred the case of particular Bhavnagar or say somewhere. Lot of registrations were made, and they ran away or something, and it was a techno savvy gang, ऐसा उनका कहना. So all the trade bodies were discussing that we should do this, we should do that. And then came the chance of our ICI, and our chairman proposed this, that why you are worried about the KYC of the taxpayer. Well, we don't know what. Well, you have a bank account, and the banker do all the KYC. Then the revenue secretary got, yes, this is a good idea. And from that suggestion of our chairman, this amendment has come up. Because if a person files GSTR1 and there is no bank account, this means either he is a fake, or his identity is not known, or it is not cross-checked, because the bank will always do a complete cross-check, which the department may not be able to do because of the technological Aadhaar authentication, OTP, they all failed from their perspective. So what they thought, कि before filing GSTR1, if bank account is there, then we will reflect that transaction in 2B of the supplier. And then only he will be able to take ITC. So the revenue of the department is safeguarded, because it is not reflected in 2B, the supplier is not reflected for ITC. And if you want to reflect, you provide bank account, it means you are a genuine taxpayer. And further, if he doesn't file 3B, they can immediately catch up, because already DRC 01C and 1D, which Manish Bhai has started the session, it will be issued immediately. So the time gap to catch hold such types of fake registration plus ITC, this arrangement has been made on recommendation of our chairman.
Before Manish bhai want to comment, just add up on, because if you go to open a bank account, my only suggestion was that why department people are roaming here and there and verifying the physical verification of the premises, and they want to identify the person. This is all done by the banks. When you open a bank account, they get the signature done in front of them, and they do the premises verification, also the address of the SEC. Bank account is doing it, not required to put so much restriction in the GST registration. So somehow they have taken this point that the GSTR1 will not be allowed to be filed unless the bank account detail has been given. And a good thing, we think that it will, if other restrictions are not there, still the physical verification conditions are coming, and other conditions are getting amended. So I'm seeing both the things they have adopted. Department physical verification is also there, bank account is also required. So they are basically tightened up the situation from all ends. So whether this will be a trade friendly measure or not, that time will say. Manish bhai, you want to add something? Then
No,
otherwise,
nothing. I totally agree, and I really compliment the effort put in by the ICI, especially GST committee under the leadership of Chairman Sir, is really great. Sir. Thank you.
Thank you. So we, after this GST registration provisions,
Sir,
some
there are
amendment.
two. Sir, there are two
Hmm.
more registration related issues. But I also remembered that your visit with Chief Commissioner SGST in Gujarat, and you suggested this thing. So we have an ability, I can say, under your leadership, we have an ability to touch the pain areas and to solve that. So compliments for that as well, sir. Sir, in Rule 23 also, now government has enhanced the period for the application for the revocation of the cancellation from 30 days to it is now 90 days, and it is effective from 1st October 2023. Even that period can be extended by further 180 days with the permission of the officer not below rank of AC or JC. So this is also a welcome amendment which I can say from the government to make it more simple. So far as the Rule 25 is concerned, sir, the provision will applicable from 4th August 2023. It talks about physical verification. It may happen before registration allowed or post registration if department feels that the physical verification is required to be done, but they have to complete this physical verification when it is before granting the registration prior to 5 days, say at before 25 days of the applying for the registration. That is what I can say so far as the Rule 25 measures are concerned. That's it from my side, sir.
Thank you. We can move to the next topic, and that is regarding the one new section has been inserted by the Finance Act, and new rule 163 has been announced. That is the consent-based sharing of information. That is the account aggregator, and Umesh bhai was involved into this. So, particularly heading this DTPRG of this committee of the ICI. So over to Umesh bhai for the taking up this particular amendment and how it is going to impact the common man, the common taxpayer. Please touch upon this issue.
Thank you, Chairman sir. In ICI, I am also looking after technology, and I am working under GST under Sushil sir. So we both had an opportunity to visit the Chintan Shibir on 2nd of August, which was planned by the Revenue Ministry. Friends, this was a eye-opening Chintan Shibir for all of us. So the technology related amendments that the department is bringing up is having a very broad vision. So I want to just share that vision. The department is one of the department of the revenue ministry. So what the revenue secretary said that now the days of working in silos has gone. Income tax, GST, customs, excise, bank, telecom, and PMLC, ED. All these departments are economic revenue governing departments. So they all should come under one umbrella, and they have proposed a data lake policy. What is that data lake policy? They have already worked and they have already tested. So let's discuss on that. And this amendment is pertaining to that. Whatever information is coming from GST, now they are sharing with the other department. Whatever information is coming with income tax, they are sharing with GST under 26 AS or TIU or EIR. So interchange of information. They want to finish this interchange of information. Now there will be one data lake, and in that data lake they will be having complete data of economical transactions of citizens of India. On the basis of PAN, every department can plug in and put the PAN, and there will be a dashboard and every information will be there. regarding whatever transactions of GST, income tax, banking, everything. So the future, what they are anticipating is that no working in silos, one database for all the transactions, and slowly they want to reduce the compliance burden of the taxpayer, ease of doing they want to come in, and deep dive in the data to increase the tax base. So that is also the intention. And friends, if we look into it, India is a country which was 74th number in 2004 or 13 for digital governance. Now it is in top 5. And if such things, we have seen that GST and within 6 years have brought so much of technological changes, income tax also bringing it. Now revenue department thinking from this angle, and they are putting crores of rupees in this. So future of our taxation lies in the data, and they are compiling or having a data lake. So these amendments are going to have big impact in future, and already pre-filled returns in income tax, pre-filled return in GST. We have seen the 3B is reflecting the GSTR1 figure. It is reflecting 2B figures. So in future, more and more pre-filled, even audit reports will also be having some schedules. So lot of discussions were there, and we were amazed. The government is much ahead in technological evolution. So we as a chartered accountant has to upgrade our skill set, get into technological deep dives, change our mindset, and then come over in future of our. And already our institute has amended the new syllabus, new education policy for the fresh chartered accountants who will be coming up. So that was the view which came from Chintan Sibir, and with these amendments.
One of our viewer has just commented, thank you, Medbhai, just commented, sir, banks are not verifying the premises of the account holder at the time of opening of accounts. Kindly note. Thank you, regards, Mr. A. Suresh. I want to get the views of the panelists, whether banks are verifying the premises or not. Any occasion, sir? Because it is all about data. Umesh bhai, first you can comment. What is your experience?
Sir, if they are having a valid documentation and they had a third party verifications, if the address is third partically verified, then the bank may not go to visit, but otherwise the representatives do visit to the places from where the bank accounts are open, in my view.
Any feedback, Manish, sir?
No, it is not compulsory that they will visit the premises, but anyway, that provision is there in GST that officer is going to visit 45 days or whatever. So I don't think it will make any impact, but definitely that suggestion is that bank account, what they are taking is really good before GSTR1. Over to you, Chairman, sir.
Somebody want to say
Yes, sir. Sir, banks are not opening bank accounts without proper due diligence. So if the person is in existence, then and then only they are opening the bank accounts. So meaning thereby, they may not be physically verifying the place, but they are verifying the entity or person. That's it, sir.
Let me inform the panelists and all our viewers. After this meeting with the high power meeting, which Umeshji was talking, I checked with the bank and I found out very unique things these banks are doing now. How they are doing the address verification? They are checking whatever mobile number you are giving and your residential address you are mentioning in this form. They are verifying with the mobile company whether this particular mobile number remain at this particular address during night time, 9 p.m. to 9 a.m. Whether this location of this particular mobile number was same as the residential address given by this particular gentleman. So bank are using technology like anything, and people are thinking that They are not doing the physical verification. They are doing much more technology advanced verification, because if somebody is last 1 month sleeping at particular place, then it is his residence. That is the confirmations now banks are doing with the aid of technology. So that I wanted to suggest, Mr. A. Suresh, please do not confuse with this. Somehow this technology is not merged with the GST, not merged with the GST registrations. Otherwise, this would not have been happened. So now we were quickly moving because the time is running,
Sir,
and we have
sir,
number
so
of topics.
you want to question that sleep at home?
You can make out anything, but I'm not going to suggest any suggestion for you or any of the panelists or rather any of the viewer. This is a chartered accountant gathering, so no suggestions. Let me restrict myself. Now there is a big change. Bishan Bhai, particularly, I want to discuss with you this ECO, the electronic commerce operators, and there are a number of changes now. This composition dealer also allowed to do trade. Any unregistered person is also allowed to do trade. So we want to understand the entire gamut of this ECO amendments, which done by the circular number 194 or
Yes,
by
sir.
34, 37, and notification 36. So number of changes, and notification 38, if you go, rule 46 has been amended. So number of things related to ECO, I just wish you to take up this particular point.
Yes, sir. Since Startup India is the initiative of the government, Digital India is the initiative of the government, and we all are traveling through this technology and drive ourselves through this technology. These clarification are much more welcome clarification, I can say. And when we are having this open network for digital commerce, where two or more electronic commerce operator are there in the system, the government came with this provision, clarification with circular 194. It talks about where there are more than one e-commerce operator. Say one person in these whole e-commerce business is buyer. Second is buyer's e-commerce operator. Third is e-commerce operator of we can say seller and seller himself. So when buyer buys something through his e-commerce operator, he is going to pay amount to his e-commerce operator. That is buyer's e-commerce operator. Then buyer's e-commerce operator will transmit or transfer the amount after deduction of his charges to seller's e-commerce operator. And then seller's e-commerce operator is, after deduction of his amount or charges, remit the amount to seller of the services. So in that scenario, when there are two or more e-commerce operator who has to deduct or this TCS tax of the seller, this circular clarified that the seller's e-commerce operator is required to deduct the tax from payment he is making to the seller, and he is required to file form GSTR 8 and report this transaction. So far as the buyer's e-commerce operator is concerned, he is not required to do to deduct any tax or report this transaction. However, in certain transaction, it might possible that e-commerce operator, which is seller's e-commerce operator in this example, is also a seller himself. So only three parties: buyer's e-commerce operator, and e-commerce operator of selling the goods. The third person is this. So whenever amount has been collected by buyer's e-commerce operator, he will remit after deducting his charges to e-commerce platform who is selling those supplies, and he is required to deduct TDS and to file GSTR 8 and complete the formalities so far as the section 54 is concerned. That is what has been clarified in circular 194. Now coming to this notification number 34, it casts responsibilities on e-commerce operator, where an unregistered person is supplying through e-commerce operator. In that scenario, it says that there is no need to deduct any tax, but e-commerce operator has to verify that this person who is unregistered and supplying through e-commerce operator is not doing any interstate supply. He is having a presence in a single state only. He has the permanent account number, and this unregistered person has to furnish a declaration on the common portal that he will not do any interstate supply, or he is not having any other presence in any other state. He need to go and apply for enrollment number. So the enrollment number will be given to him instead of GST registration, and it will be on a PAN based enrollment number. That is what this notification number 34 is suggesting, and 37 is casting the responsibility on e-commerce operator. So far as the notification number 36 is concerned, it also allows a composition dealer to have a transaction on e-commerce platform, and for that he has to see that he will not do any interstate supply, and e-commerce operator has to deduct his TCS in that case and report this transaction on GSTR in GSTR 8. That is what has been given by the government in this notification number 34, 36 and 37 as well. So that's it from my side. Also, there is one change so far as the tax invoice is concerned. When e-commerce operator is generating the tax invoice, it says that only state of the supplier is required to be mentioned so far as the invoice is concerned, which has been raised by e-commerce operator. That is what the amendment in Rule 46. Sir, here they have replaced the words. Previously, it was mentioned that in the invoice, name of the state along with full name of the buyer, his address, his PIN code is required to be mentioned. Now, what has been amended, there they are saying that name of the state of the recipient has to be mentioned only. So there is a doubt in my mind as well, whether in that such type of transaction, are we required to write a name of the buyer when we are purchasing something from the e-commerce platform? Since they have replaced the word with only name of the state of the recipient is only required to be mentioned, I guess there is no need to even go for the name of the buyer as well. That's it from my side, sir.
Anything Manish Gadia sir want to add here?
Just I want to add one thing, Goel sir. Bishan Bhai has said that notification 34 says that e-commerce operator has to ensure that in case of unregistered dealer, he should not supply interstate and etc. 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 So, and he has to take a declaration, etc. Everything has been taken. But after giving declaration also, if any single transaction of interstate has been done by that supplier, maybe not through a e-commerce portal, maybe directly, then what will be the responsibility of the e-commerce operator if some clarification will come on that, because he can't control that supplier in totality. So it will be great. Otherwise, that maybe a responsibility of e-commerce operator will be casted on him to ensure that it is practically difficult. That is from my side.
Thank you, Manish ji. This is very valid point added by you. Now over to Umesh Sharma on this e-commerce operator, sir.
Nothing to add, sir. Nothing to add.
We are expecting that everything will be turned into e-commerce, because now the Indian household are using it too much. This is the future, at least we can say. And even these local traders are now enrolled themselves as a trader on the e-commerce operator platform and doing trade, supplying goods. Even the next door shop is also sending goods to you, might be sending you through e-commerce operator. So this is a big change. And another change, which is I just want to touch upon, that is the amendment in section 10 of IGST Act. There is an amendment and which says if the state name has not been mentioned by the supplier in the invoice, then the supply will be considered as inter-state supply. It will not be it will be considered as intra-state supply. Then the place of supplier will be the place of supply. So that is the state, as Bisan Shah has correctly mentioned, that the state is mandatory to be mentioned. But in case it is not mentioned, then the place of supply will be considered as a location of the supply. So that is the amendment came in section 10 in IGST Act through this Amendment Act 2023. I think they want to avoid the dispute. If it is the IGST transaction, which state that money will go, let it be remain with the supplier state where he is. So with this, we are now moving to the next amendment, next big change in the GST, that is related to refund. And I request Umesh Sharma to touch upon this refund amendments related to refund, because refund is always a pain point, I can say, for the businessman, because getting refund is not so easy. Definitely, it is, and it is the area where I have seen the maximum amendment since introduction of GST. The refund is a particular area where always we see some amendments. So, what are the amendments came by this recent councils? Over to CEO, Mr.
Yes, sir. In case of refund, a circular is issued of 197 number, which is having summary of all the amendments. And I will like to quickly go through that. And there are four major points which are the takeaways from this circular. The first point is the accumulated input tax credit refund. Here they have clarified that whatever accumulated ITC is there under section 54 subsection 3, which is restricted now as per the invoices reflected in 2B. We all know that from January 22, 2A was discontinued and 2B was there. But consequential amendment was not made in 54 subsection 3. So now they have done it. So refunds which are already disposed of prior to January 22 will not be disturbed, but after January 22 and before issuing of this circular, if they are pending, then they will be applied. Those who have already got the refund on the basis of the 2A, they will not be reopened. So this is one of the change, that refund will be granted only as per invoices reflected in GSTR 2B from January 22 onwards. I think everybody was anticipating this, but now they have brought in and the circular is also clarifying it. Now next is undertaking requirement in RFD 01. Friends, RFD 01 is having a lot of requirement. Out of that, one was of the undertaking, that refund sanction will be paid back to the government with the interest. Now here section 42 has been omitted. The concept of provisional acceptance of input tax credit has been removed. So whomsoever now apply, and it is now linked with section 16(2)(c). Now what is section 16(2)(c)? That suppliers pay the tax, ITC is allowed. So if such cases are there, if the refund is granted and it is found that subsequently the supplier don't pay, then the interest need to be paid back and the refund will be taken back. That was the undertaking which now they want to take. So they have removed the undertaking but replace it with section 16(2)(c). Now we come down to the third. Third is relating to the adjustment of total turnover for calculation in Rule 89, Sub-Rule 4. Here, the value of goods exported out of India should be included while calculating adjusted total turnover while determining the turnover. So this is the clarification that has came up, and this has been included. So Rule 89(4) has been amended accordingly. So value of export of goods out of India needs to be taken up in calculation. So what will be the impact case to case basis? We will have to check up. Now comes the most important, and the fourth number is the refund admissibility for the exporter. Here, if an exporter who voluntarily pays the IGST which is due, and applicable interest will also be there. In the cases of goods, in the cases of export where the goods are not exported or the payment for export of services could not be received within the time frame, clause A or clause B, then in such case they are entitled to claim refund not only of the unutilized input tax credit on account of export, but also the refund of IGST tax which they have voluntarily paid, along with interest if they have paid. So this is the Rule 96A Sub-Rule 1, and this is a good that the clarification is there on voluntary payment if anybody pays and subsequently no exports happens, or some services where services is done but payment is not received, then in such cases the IGST and interest paid will also be refunded. So this is the case, sir. From these four amendments I tried to cover in due to the time. Over to you, sir.
So, Ms. Sarmaji, I just want to know whether these are trade will be benefited out of this amendment, or this is further restrict the refund done.
Fourth number was beneficial on voluntary payment. Upper three are restrictive.
25% is in favor of the trade, and 75% is basically restricting. Any take on this, CA Manish Gadias? No,
Nothing from my side.
And, Visanjeev, you want to add something here?
It's perfect.
Okay. So
Nobody gets refund, so no comment, sir.
We should not say so. Ultimately, huge amount of money has been refunded. Trade are definitely getting refund, but it is a restricted way maximum, you can say. If anything which is not helping the trade, definitely we may represent it. Now there are certain clarifications which has come up by these amendments, that is regarding the fish soluble paste, unfried or uncooked snacks, pellets, that is fram, usually known as desiccated coconuts, biomass, briquettes. I think the circular 200 has clarified all these issues. So that is the imitation juries. The rates has also been changed in number of items. And what exactly I'm pointing out here, and I wish to hear it, all these circulars has mentioned as is basis. So basically, what exactly this amount? I want to first discuss with CA Visansa. As is basis, what exactly it amount? I think Visansa has lost connection. I have to re-log into. I am going to Umesh Sharma. Then definitely I will go to Manish Gadia sir. What exactly it amounts, sir? So many times it has been used in the circular, rather in each paragraph they have used it is as is basis. So whether if I have not paid
Yes.
the tax, required to pay the tax, what exactly it amount or what we should understand from as is basis. Yes, over to Umesh Sharma, then I will go to Visan sir. Yeah.
Sir, this is a very important question. What is mean by as is basis? If we refer it into the dictionary meaning or say common parlance, जैसे थे. So, if we refer to the circulars which are issued, actually they all are having some representation done by some authority, some trade bodies, or some taxpayers that they are facing some genuine interpretational issues, or there was some confusion in interpretation, and there is third is the genuine hardship that has occurred in the past. So they represented to the GST Council, and the GST Council have deliberated on the basis of representations, and they brought in a circular that they say that this rate of tax, say on FRIAMs or Jari trade and some pharmaceutical item. But most important part which we want to discuss here, sir, is regarding to the RCM on the raw cotton, or say including kala cotton. Here the cooperatives represented, but according to our information, even the normal ginning pressing units, means the bodies of the cotton federation, even I also given them some inputs, and the bodies have represented to the government. But unfortunately, fortunately, it's only the cooperative word is there. So in that case, what they have clarified, if in the past RCM is not paid, it was applicable on cooperatives. So in the future transaction, they should pay. And for the past, the matter is closed on as is basis. This also came earlier in the case of Chunni, wo kanda jo tha, in dal mill cases. They also brought in earlier clarification that is as is basis, past will be closed. Now, if we come on the as is basis, means somebody has not paid RCM, they need not pay for the past, but for the future they should pay. If somebody has paid, then as is basis, it is closed. In case of tax rate of that coconut crush, uh, somebody paid 5%, past, okay, 5%. Somebody paid 12%, okay, 12%. But in future, now he should pay the correct rate of tax. So, sir, it is a very important analysis for we all the tax experts, that how as is basis can be implemented on a particular product, or on a particular service, or on particular class of the taxpayers. We understood in case of Fryam, Zari, it is on the product. So whomsoever is dealing on that product, he is covered. But when we come on the RCM, they have said it's a cooperative. Now, can a particular class can be put up in the as is benefit? And what about the others who are not falling in cooperative, but they are not deducted, they are not paid RCM? Because it's a very big issue in the audit. Even DRI, DGCI, they have carried on raids on the ginning pressing units, because in the start some units have not paid. RCM is a revenue neutral. Many things are there. So according to me, if my case is falling in the same transaction of a good, of transaction of service, then the case should be applicable to me also, and the benefit of as is basis should be granted. Definitely the department will be of different view, but the hope the higher authorities or high courts should be giving some benefit to such types of the taxpayer who are left out or who are feeling that I should also be covered in as is basis. So this is my view, sir.
Over to Manish Gadia for his view. Definitely, Umeshji, the elaborated definition you given, I won't think the department will accept that because you covered everybody, everything into it. This as is basis, I think let me hear both the panelists, and I will definitely share my thoughts.
So, Umesh Sharma ji has deliberated in great detail as is basis. So, my only view is, my only concern here is that whether this kind of circular is valid, or if somebody has paid more tax or maybe paid less tax in the future and can be given benefit, because legally where it will stand need to be seen in a court of law, because it's just a circular. So that is from my side. We have to wait and watch what is going to happen on the basis of the circular. Over to you, Chairman, sir.
Sir, may I add something? Yes, sir.
Yes.
Sir, in the last line of this circular, they are saying that refund of taxes paid will not be eligible. So it is just a Sabka Vishwas scheme if you have that amount, though your case is pending before appellate authority, though there is an interpretational issue. That is what I can say. Sir, this is a welcome decision so far as there is some issues and they have addressed it through this as is. They have regularized it with as is mechanism. But if someone has paid interest and penalty at that time, that should be allowed to be refunded. And if there is an appeal, then also that fellow can be allowed to be heard, and that judicial process should be continue. That is what I believe. Let the high courts decide, or any judicial authority should decide on whether there is a taxability or not. So far as this raw cotton is concerned, previously they have not mentioned kala cotton in the tariff, and since now they are putting word in clarification that kala cotton is also covered under reverse charge, then in that case I can say it will not be with a law backing in that entry or this circular itself. So two things is required to be addressed: is whether payment of interest or penalty paid during any investigation will also be eligible for the refund, and what will be the fate of the cases which are the raw cotton is concerned. They said that it will be eligible to the cooperative only. Whether as per the equality in the Constitution of India, can such type of deviation amongst the people possible, sir?
Thank you, Vishansa, for adding the point to this. But what I understood that if government has reduced the rate from 12% to 5% on certain item, so if somebody paid 5% or 12% in the past, both will be accepted. But under no circumstances, government is going to accept zero rate, means you have not paid nil rate. I should not use the word nil rate. That should be, I should use the word nil rate, not zero rated, because zero rated is something different in GST. So if somebody has not paid the tax, definitely he has to pay the tax. Now, question will arise whether now after this clarification, whether government department will ask 12% or they will ask 5%, because some number of persons has paid 5% and number of person has paid 12%. Now government is saying whoever paid whatever we are going to accept, we are not going to raise any demand. And Bisansa has correctly mentioned that if somebody paid the 12%, he will not be given benefit of the refund. So refund will not be allowed. So zero rate, those who have not paid the tax nil rate, will definitely going to have the notices, and what the amount government will mention, what the rate will be applicable to them is definitely a point of discussion, and court will decide, I think, because we have no answer or government has not said anything about this. So definitely reverse charge is not touched upon, only the cooperatives are touched upon, and no logic. I fully concur with the views of CA Umesh Sharma that no logic of a class of persons has done mistake and other class of person has not done mistake, they have done intentionally. That should not be the viewpoint of the government. If their government is accepting that there was a confusion on this particular item and people have not paid the tax, so why to only cooperatives if done the mistakes they are free, and if Sushil Goyal has done the mistake, let him hang. So that should not be view of the government any point of time. I think 15 minutes left and we have certain issues which is yes, still to be dealt in. So Manish ji, if you quickly, we will now move, and number of questions, more than 80 questions I can see right now available on the dashboard. So I will take up the questions after one point which I want Manish ji to discuss about this director in his personal capacity, the reverse charge on the director remuneration. He will not cover the renting and other things. That is circular 201. Manish ji, let me tell you, this people are discussing the personal guarantee given by the directors. Number of questions we have received. If you can touch upon this, I understand time is short. We will close the session at 7 o'clock sharp. Over to Manish Garg.
Manish bhai, kindly unmute.
So thank you, sir. So we all know that there is the entry number 6 in notification 13/2017, which says that services supplied by director of a company or a body corporate to the said company under reverse charge mechanism. Now the question arises here is, so any service provided director in the capacity of director or maybe in his personal capacity will be covered under reverse charge mechanism. And whenever the department is coming to any body corporate, they said any service received by a body corporate, maybe in the capacity of director or maybe in his personal capacity, everything will be covered under reverse charge mechanism. So now they have issued a circular on 1st August, circular number 2001, which says that a service is supplied by a director of a company or body corporate to the company or body corporate in his private or personal capacity, such as services supplied by way of renting of immovable property to the company or body corporate are not taxable under reverse charge mechanism. So the meaning that if that director maybe charging any rent to the company, and if his turnover is less than 20 lakhs, then he is not required to register also. And because in that scenario, that tax will not be payable ultimately. So the first thing is that renting, maybe second thing, maybe a professional fees. If it's a professional and maybe a recovering professional fees in his personal capacity, giving any consultancy to the company, then also it will not be covered. The next question, what very valid question Chairman sir has raised about the personal guarantee given by the director in respect of the company in which he is a director. So he is giving this personal guarantee, in my view, as a in the capacity of director, not in his personal capacity. That is what view I am holding. Second is that issue is there whether it is a service or not. I may differ that, or I may have a view that this will not be any service. But presuming that if it is a service, if we presume that this is a service, then reverse charge will be applicable. But again, the transaction between director and a company will be a transaction between related party. And if it is there is no consideration, then the rule 28 will come into play. And 28 says that if the recipient is getting a full credit, is available, full credit is available. In that scenario, the transaction value will be treated as open market value, and the circular which we have discussed earlier, that Bishan Bhai has discussed in respect of a distinct person, similarly may be applicable for related party also. And in that scenario, if he has not charged anything, not paid anything, then also it can be contested. But in my view, whether this is a service or whether it is a supply or not, that need to be tested in a court of law. So very good circular, putting rest to various litigations which has been raised in respect of services provided by a director in his personal capacity to the company will now not be covered under reverse charge mechanism. So thank you, Chairman sir, and from my this is from my side. Over to you.
Thank you, CA Manish Gadia. Now over to CA Visan sir, if you want to add something here.
No, sir. Whatever has been deliberated by Manish Bhai, it's perfectly fine, sir.
Umesh Sharma sir want to say something?
No, sir.
Thank you. So thank you, the panelists, for the discussion. Number of points, as I mentioned, I left out. We will try to organize very soon a amendment, because I understand the online gaming and this sort of amendments are coming to be applicable from 1st of October. So before 1st of October, we will definitely try to discuss. One thing I want to say, this amnesty which is given by the government by way of late filing of Form 9, the annual returns, and the final return, that is Form 10, GSTR 4, and the revocation of registration in Section 62. So all this has been extended up to 31st of August. Only 3 days left. So anybody has not availed this benefit, please avail. Now I'm quickly taking up the questions because a good number of questions are lying up. Manish ji, I am asking one question. There is Manisha Talreza has asked, respected sir, if company is paying salary to director, not sitting fees, then RCM will be applicable. Please guide.
Salary is actually covered, sir, in Schedule 3, which is neither supply of service nor supply of goods. If it is, there is an employer and employee relationship is there. So if it is not a supply at all, then no question of reverse charge mechanism or forward charge mechanism.
Thank you. Now I am requesting Kisan sir to answer this. Hardik Bhatt want to know, sir, whether Rule 28, second proviso, will be applied for cross charge of ITC on externally availed common services.
Sir, so far as this externally avail only if his outward supply is taxable. So in that scenario, whatever, if the credit is available, then they can issue the invoice and distribute this credit at any value. So as per Section 28, if both person, branch office and HO are liable for outward supply payment, then in that case, they are eligible to take credit under Rule 20.
Thank you, Vishanji. Umesh Sharma ji, Surbi Arora want to know RCM on security services. If we are paying on forward charge, what will be the situation? But I won't think security services are under reverse charge.
Yeah, but the question is that it is already paid under forward charge, na?
Yeah, if we are paying on forward charge, RCM on security services. So
Yeah,
this is the question from Surbi Arora.
Yeah, I think the option to pay on the forward charge for the security services, if the recipient is covered under RCM, that option is not there. Like GTA, there is an option that you pay under forward charge or you go under reverse charge as an exempt for the supplier. But here the question is that the supplier want to pay under forward charge, but the recipient is covered under reverse charge. So in such case, the security services where it is covered under reverse charge, I think that reverse charge should be applied, not the forward charge.
But I think, Umeshji, this security service is not in the reverse charge right now. It was in service tax regime, it was in service tax regime only reverse charge was applicable. What Visan and Manishji has to confirm. I am also getting confused by the question whether security service is under reverse charge.
Sir, in previous regime, when such type of situations arise, and in that case, under forward charge, it should be eligible payment, or department cannot ask from the recipient or under reverse charge as well, if there is sufficient evidence, corroborative evidence that the taxes has been paid under the forward charge.
But that is court to decide. This is not a thing to be adopted.
Yes.
If it is wrongly done, one can take benefit. One nice question on reverse charge. I have paid the taxes under reverse charge on import of services, but ultimately the contract get cancelled. Can we claim refund of the taxes paid under reverse charge on import of services? Under which section and what document to be attached? Bisan sir, please answer.
Yes, sir. Sir, yes, of course, because there is no supply involved, and hence a person can eligible for the refund, and they should file RFD 01 under wrongly paid taxes. That is what my view is, sir.
Yes, exactly, sir. Refund can be claimed. This is, I also concur with the same view. Umeshji, Mr. Sandeep want to know whether taxes paid for the September 2017 in the month of April 2019. And department is now asking for interest, whether I can save interest by any means.
The query is that the taxes are payable earlier and they are paid later.
September 2017 tax was payable, paid in April 2019. Now department is asking for interest. Can I save interest?
Here it is very clear that there is a tax liability, and if the tax liability is arising and if it is paid through cash, there was no credit available, the liability is coming, interest need to be paid because it's a late payment of tax.
Survi Arora ask another question. Sir, please, Manishji, I wish you to answer. Sir, please clarify, if anybody capitalize his spare parts, then what will be the implications regarding ITC on it?
See, sir, if we go to the definition of capital goods, it is very clear. If anything you have purchased and if you have capitalized in the books of account, then it will be treated as capital goods. And once it is treated as capital goods, then the effective life may be of 5 years, then 5% reduction and all that provisions will be applicable. That is what my view is.
We have 2 more minutes to go. What if payment is not received for outward supplies? Himanshu want to know this. What if payment is not received for outward supplies? Government expect the supplier to deposit GST amount without the supplier getting the same from its customer. Listen, sir, to answer, because I think he is disconnected.
Sir, irrespective of whether you are hello.
Yes, listen.
Sir, is irrespective. Yes, sir. It is irrespective whether you have received payment or not. Since you have made supply, you are liable to pay the taxes. But under MSME Act, you can definitely ask your customer to pay your dues. That is what law says. Or if the contract get cancelled, then you can issue a credit note. That's it. In stipulated time.
Umeshji,
That is what my view says.
Thank you, Bisanji. Umeshji, Damodar Kutwalkar want to know, I have stayed in a hotel outside my state, and considering the point of supply, but the logic of the denying ITC credit to the dealer who travel other state for his business, not able to claim the ITC. what is the consequence? What
It
is the
is correct that ITC will not be available because he is staying in the immovable property, the place of supply, the local state tax, CGST, GST applicable, and the credit is not applicable in the state where the recipient is.
Pawan Kumar, Manish ji, please answer this. Pawan Kumar is asking, my client has taken registration as an e-commerce operator, but he is doing retail trade himself only through his website. Is there any requirement to change in registration?
In my view, definitely he should change because he's not falling into a definition of e-commerce operator. And once he is e-commerce operator, then again, that filing of TDS, TCS return and all that will be there. So it is better to change and to the correct that retail trading or whatever. That is what my view is.
Thank you, Manish ji. Chidrup Jain ji want to know, sir, which section for unregistered for supply through e-commerce operator? Who will answer? I think there is no section. It is the circular which is allowing.
Yes.
And that is the circular
36. 34, sir. 34.
34.
34 allowed
allowed
to
it.
unregistered person to trade, and please go through that circular and you have to enroll.
Sir, it's a notification.
Yeah,
you have to get the
34/2000.
notification 34. You have to enroll based on your PAN number. Bhupender ji want to know, there should be a standard list of document cause lack of which same creates so much confusion and the matter litigation for registration. We should be contacting ease of doing business. रजिस्ट्रेशन के बारे में सर एक लिस्ट दे देनी चाहिए. उमेश जी आपके व्यूज, सब मैं हर आदमी से व्यूज लूंगा. Then we will close. It is 7 o'clock.
Sir, according to the queries, it is correct. There should be a standardized list, but the department is not giving the list, and the officers, according to his sweet will ask different documents, and the registrations are getting delayed. So it's a issue, but somehow the things are not in the way because of the fake registration, fake ITC. So this issue is there, and it should be streamlined.
Manish ji, quick point on this.
Sir, I completely agree with Umesh Sharma ji. As I want to share one case in my office, happened yesterday only. So we have applied for registration of one of the client. Then in the evening 5:30, they have issued some discrepancy memo saying that you have not uploaded this document. So and they have given 7 days time to us for uploading the same. All the document what has been asked for, we have already submitted on 6 o'clock. That is within half an hour of raising the discrepancies. 6:15, we have got an order for denial of the registration, saying that this document has not uploaded. So even though the standard list may not be there, but the document what they are asking, if we are submitting without looking at the document, they are just passing in a rejection order within 45 minutes or maybe within 15 minutes of submission. So some challenges are there, need to be improved. That's what I can say. Thank you, sir.
Kisan Saji, last word.
Yes, sir. Sir, there should be a standard operating practices, SOPs, and that is what we have also represented to Chief Commissioner here. And in one of the incidents, what Manish Bhai said, it was happened, but the Chief Commissioner of Central Tax here so much kind that they work on Sunday and they feel that it was a technical glitch and they resolve it and they have then granted the registration. It might be possible, Manish Bhai, it's a technical glitch in your case, but even department people are so much cooperative and sabka saath, sabka vishwas. That is what we can say.
I can say
गुजरात स्टेट का स्टेटस बता रहे सर.
Correctly observed by Umesh Sharma ji. Gujarat is Gujarat and Maharashtra to improve. Thank you both the panelists and Umesh Bhai, Vice Chairman, for joining this webcast and taking up the topics. I think it must be liked by the viewers. We have almost 2,700 logins and more than 100 questions which is
Yes.
asked. Definitely, we will come up with another webinar in the month of September, and this is the informal vote of thanks I have offered. Now I request Vice Chairman, because it is his prerogative to offer vote of thanks always. So, Umesh sir, please, and
So
please also cover
thanks to
yourself also. Please cover yourself also while thanking.
First of all, thanks to the participants who were there from beginning, and the number goes on increasing. This shows the interest in our subject, in designing of the panel discussions. So, big thank you to our panelist Manish Bhaiya for starting the session and leading the show. And then come the firebrand smart person from Ahmedabad, Vishan Bhai. Keep it up.
Yes, sir.
As a panelist, you were there to enhance the views, and we have seen that participants have grown up in number. And one of the most important person, our chairman, Sushil Goyal sir, and hats off to you, sir, that you have softly taken the role of the moderator. Actually, your views are the concluding. You are the technical chairman of the session as such. But we enjoyed all three under your leadership, and thanks to the technical team, Jay, and our team of GST and indirect tax committees, Smita madam, Inpreet, Ajay, Deepak, and Veeni madam, and all those who are working to make this type of sessions successful, even for the GST certificate course, for 1 day course, or say 2 day conferences. Our team is there. Number of books are also planned to be released soon. So GST committee is working hand to hand with all of you. Your suggestions are always welcomes. And with these words, I propose heartily vote of thanks to all the panelists and to Sushil sir and our technical team. Thank you. Let's meet again.
Including Vice Chairman COMS.
Yes, sir. Thanks to
Thank you.
all
Thank you,
of
sir.
we,
Thank
all
you.
of we.
Thank
Yes.
you.